Okay, we're going to finish out application 6.3. So we've done application 6.1. We did the trial balance. We did application 6.2. We recorded the adjustments. And now we're going to do application 6.3 and finish out the worksheet. So we're going to start pulling our amounts over, and cash line 1 all the way down through line 8 is going to go to the balance sheet, because the balance sheet lists your assets, your liabilities, and your owner's equity. And the income statement columns, on those you pull over your sales and your expenses. So everything, your income statement is going to show if the company made any money, and the balance sheet is going to show what you have and who you owe. So let's start pulling these over. 855. Now supplies, you started out with a $690 debit, but you adjusted it with a $440 credit, so you're going to pull over a $250 debit, because $690 debit minus a $440 credit gives you a $250 debit. Prepaid insurance, a $900 debit minus a $150 credit gives you a $750 debit. And then you're going to pull sales and your expenses over to the income statement. Now, your insurance expense, you started with nothing and you pulled over a $150 debit, so you're going to put in a $150 debit. Supplies expense, same thing. You started with the zero balance, but you adjusted it with a $440 debit, so you're going to put a $440 debit. Notice on my worksheet, the income statement columns, you have one credit and all the rest are debits. Make sure you glance back and note it and see that all of your entries there, you have one credit and the rest are debits. So now we're going to total up all these columns. Your income statement debit column is going to be $1476. Income statement credit column is $2270. Balance sheet debit column is $1475. And balance sheet credit column is $13,281. So now we have to determine whether or not the company had a net income or a net loss. And on the income, so you go to the income statement to determine this. The income statement columns, $2270 is the credit column, that represents all the sales. $1476 represents the expenses, and that's the total of the debit column. So your sales were more than your expenses, and that's good, so you have a net income. And your net income, you say $2270 minus $1476, and that gives you $794. Now we're also going to put the $794 in the credit column of the balance sheet, because if a company, a sole proprietorship, has a net income, then that net income is going to benefit the owner of the company, and the owner of the company's interest is represented by the capital account. And in order to increase the capital account, you increase it with a credit. So we're going to put it $794 credit. Now we're going to total these up, and this is where we need to verify that our debits equal our credits. So $1476 plus $794 is $2270. $2270 plus 0 is $2270. So far, so good. Our debit and our credit column of our income statement agrees. Now we're going to pull over $14,075, and 0 is $14,075, and $13,281 and $794 is $14,075. So our debit and our credit columns of our balance sheet are equal, so we've proved those. So it's important that when you put the $794 here, you also put $794 here. And if these two amounts don't equal, then you've done something wrong. So this is kind of your checks and balances. So now we're going to go ahead and draw our line here. Our debit and our credit columns equaled. So we're going to draw our lines here. And then you guys also already have double lines over here where you verified that your debit and credit columns of your trial balance and your adjustments equaled. And so that should complete the worksheet for application 6.3.